potential upside on the charts, we actually could go up and do, let's say instead of 660, we do 550, and that would take us up to about a $7,000 price target, give or take. So again, this is just one way to do it, where I'm saying, okay, well, historically, the bull run of the 70s into the 80s was 750%, 660, 550-ish, 560. So it's about 100% less each time, but that gives us at least some basis to kind of figure out a potential upside price target. But I think, again, it'll take time for the US to get into a little bit of a recession like I think we're going. And then once it looks like we're going to emerge, I think that's where silver starts to take off to the upside.
Gold's performance in 2025 has been nothing short of extraordinary, with the precious metal consistently breaking through its previous all-time highs. The surge in its price is driven by several key factors, including escalating global economic uncertainty, rising inflation, and a growing demand for assets considered safe havens, particularly in times of financial instability. Even amid this upward trajectory, the market has recently experienced a brief pullback. Yet, Chief Market Strategist Gareth Soloway views this correction as a natural part of the larger bullish trend, reassuring investors that such dips are normal in strong markets. These pullbacks offer prime opportunities for those looking to buy gold at more attractive prices before the next wave of growth pushes its value even higher. Soloway underscores the recent gold price fluctuation as a routine consolidation phase following a powerful rally. He explains that these pauses often occur at pivotal points and do not indicate a trend reversal, but a brief dip should not alarm investors, as it is typical for prices to consolidate before resuming their upward march. While the short-term outlook may seem uncertain to some, Soloway remains confident that the long-term trajectory for gold is decidedly bullish. He emphasizes that gold's price is expected to rise further once this consolidation phase ends, providing ample opportunities for those who remain patient. Drawing upon historical market trends, Soloway projects that gold could see substantial gains over the coming years, similar to the incredible bull markets of the 1970s and early 2000s. In those periods, gold experienced unprecedented percentage gains of 750% and 660%, respectively. Soloway believes the current market environment, with its high levels of uncertainty and growing demand for gold. Based on these historical parallels, Soloway forecasts that gold could reach between $6,000 and $7,000 per ounce soon. As global economic pressures continue to mount, gold's appeal as a safe haven asset will likely intensify, setting the stage for continued strong performance in the years ahead. Now, we present the clips from Soloway's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
Gold has been very bullish all year, and now it's finally getting what I would classify as a very normal pullback. So I don't think anyone needs to freak out about the pullback in gold. In fact, the chart, if we turn to the chart here, what's amazing about this is that it occurred right at what we would call in the technical world at the high of a parallel channel. And so just to show you guys this, and this is how so I'm a huge bull longer term, but I actually shorted gold with members here because it was telling us that it was going to pull back. And the way I found this is very simply by connecting the low here and the low here and essentially taking a parallel, right? So here's that trend line, and we drag a parallel line right up to the highs from 2011. This is the bull market high. And if we look right here, where did gold stop on a dime? Right there at that high. And then if we flip back to the daily chart, we could see this candle here, which is that same high piercing that parallel channel. That's what we call a topping tail. And topping tails in technical analysis are reversal bearish signals. So short term, that was the sell signal. It came down, bear flagged, and now we're rolling over. Now, again, as I said, I'm mid to long term a bull, even if I'm short term a little bearish. The key here is if it just gets back into this area here around 3140, you also have an upsloping trend line right below that. And what you can see is this trend line and this trend line are merging right around 3100, 3140. That to me is where the bulls start or should start to reemerge and price should start heading back higher. So to find a longer term target, I think what you have to do is you have to start saying, okay, what was the general move percentage wise in previous bull markets, right? So if we just erase all of these lines here and really start from, let's look at our bull market that kind of bottomed, the bearish portion bottomed out in the early 2000s. And then we obviously had about a 10-year bull market run. And so what we can do there is say, okay, well, the low was down here, and all in all, it was about a 660% bull run. And then if we go back to, let's say we go back to the bull run from the lows in 1976, and we go all the way up to the bull market high, that was about a 750% run. So it looks to me like maybe percentage-wise, here you have 750, 660. It looks like about 100% less maybe on the future side of things. So what we would then do, and again, this is just one way, right? So I want to be clear. It doesn't mean this is going to be the answer, but if we're really looking for that, potential upside on the charts, we actually could go up and do, let's say instead of 660, we do 550, and that would take us up to about a $7,000 price target, give or take. So again, this is just one way to do it, where I'm saying, okay, well, historically, the bull run of the 70s into the 80s was 750%, 660, 550-ish, 560. So it's about 100% less each time, but that gives us at least some basis to kind of figure out a potential upside price target. And again, I don't know when this will hit, right? Is it in the next year? Is it in the next 5 years? But in general, what we know is that you have, 76 low to the high of 80, 81. So that's about a 5-year bull run. This one was a little longer. It was about a 10-year, but let's just say again, if we go back to 2016-ish or 2017 right here, this could take us to 2026 to 2027, which based on the trajectory of how fast we're climbing, it does mean that, in 2 years from now, we could easily be at, $6,000, $7,000 per ounce.
Silver's price action is forming a compelling technical pattern that suggests significant upside potential. The metal has tested the $35 resistance level multiple times, showing rapid recoveries after sharp corrections each time. This behavior hints at the formation of a potential triple top, which often acts as a launching pad for further gains in the silver market. Long-term momentum indicators also suggest that silver is nearing the end of a gradual downtrend channel, preparing for a potential breakout. According to Soloway, if silver breaks above $35, a momentum-driven surge could challenge the bearish outlook from financial institutions, potentially accelerating its price movement. Historically, silver has traded at around 2% of gold's price in 21 out of the last 50 years. Meaning the current ratio near 1% points to significant undervaluation. Silver reached over 3% of gold's price during previous precious metals bull markets. While some major financial institutions express skepticism about silver's potential due to concerns over industrial demand, technical analysis suggests that the market is preparing for a sentiment shift. A decisive move above $35 could trigger a momentum-based breakout, fundamentally changing silver's performance relative to gold. Soloway emphasizes that the current 1% ratio is a slingshot setup for explosive gains, similar to the 2011 rally when silver saw rapid gains following a similar technical breakout. Let's get back to the interview.
Silver has been tricky. I mean, people are watching silver, fans are watching gold, and gold is just ripping to new all-time highs. And needless to say, silver is not even close to an all-time high at this point, trading just above $32 per ounce. A couple things on silver that are interesting here in the short term. We can see that there was this downsloping trend line. We broke above it. We kind of hammered. We bounced again. We broke through it. And then we reestablished ourselves back above it and then have kind of held this level. So as long as this line holds, I think you remain slightly bullish on it. And then if this line breaks, you honestly are probably going back down to these lows. And I think the tricky thing is that over time, silver has become more and more of an industrial metal. And with that comes cyclical aspects of the economy, right? And so China's been in a big recession, really for the last few years. We just saw negative GDP growth in the US economy. And all of these factors are making it harder for silver to make that run. Now, eventually, I think all commodities are going to go higher, at least the metals, palladium, platinum, and all of those included. But I think, again, those it'll take time for the U.S. to get into a little bit of a recession like I think we're going. And then once it looks like we're going to emerge, I think that's where silver starts to take off to the upside. So I think the U.S. dollar is going to go a lot lower. We're in a short-term period where it's bouncing. If we look at the chart here, you can see this beautiful longer-term trend line, right? So when you break a trend line, the normal thing is to continue flushing. And then what you see is usually a retest of that line, but from the other side. So over here, it was support, and support. And then we came up here, we hit it, we got a small bounce, and we broke down. Once you break down, people get all thinking it's a bullish move again when we're rallying back. But what it really is, it's testing what I call the retrace to the scene of the crime, the breakdown line. And what that happens is usually it gets rejected. Now, this becomes resistance. It was support over here and prior. Now it's resistance, and you'll usually see a move to the downside. So this implies that we could, in the short term, see the dollar rally a little bit higher, but eventually you would anticipate a move down on the dollar and actually new short-term lows be seen. I think if tariffs remain for a longer time, then I think it's very likely. And this is going to be one of those weird dances because essentially ahead of these tariffs, a lot of companies bought a ton of extra inventory because they knew the tariffs were coming. And so we have a lag of where these price increases won't hit for probably 3 months. But if the tariffs are not adjusted or lifted within 3 months, then you'll see that those bigger price hikes start hitting the economy. And that's where, again, you'll start to see, we obviously see a negative GDP number in the first 3 months of the year. You have to assume with the tariffs and the fear that we'll see another negative number. So that means recession. And then if we do not have a remedy for the tariff war and the trade wars in 3 months from now, you should start to see a pop in inflation. And I think that's where you basically have this window of 3 months or 3 months from Liberation Day to get a deal done to avoid the spike in inflation. Otherwise, we will see stagflation.
Gold is on track for continued upward momentum, driven by significant central bank purchases and increasing safe haven demand amid global economic uncertainty. With inflationary pressures and political instability pushing investors toward precious metals, particularly ahead of pivotal decisions from the U.S. Federal Reserve, gold's outlook remains bullish. Goldman Sachs has set a target for gold to reach $3,700 by the end of 2025, with the potential to rise to $4,000 by mid-2026. Silver, though often trailing gold's performance, still holds promising potential for substantial gains. While silver's price is influenced by industrial demand, such as its use in electronics and solar energy, it is more volatile and sensitive to global economic growth. However, silver remains significantly below its all-time highs, which could provide a compelling opportunity for long-term investors. Silver typically follows suit if gold continues to rise, although at a slower pace. The increasing demand for silver in industries tied to technology and renewable energy will likely support its price, providing potential for a breakout as the global economy recovers. That's it for today. Share your thoughts on Soloway's analysis in the comment section below. If you find this video informative, don't forget to support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.